The belt-tightening at Google follows other recent tech sector job cuts. Microsoft announced earlier this week it's laying off 10,000 workers, or nearly 5% of its workforce. Amazon has said it's cutting 18,000 jobs. And Meta, the parent company of Facebook, announced it's laying off 11,000 positions.
Since the first week of 2023, roughly 485,000 tech workers have watched their badges go dark, according to the Layoffs.fyi tracker. Yet this past January, U.S. employers quietly posted just over 51,000 brand new tech openings, more than double the trough we hit last summer. Two curves moving in opposite directions, one plunging red for layoffs, one flashing green for fresh postings. So the question that matters to every engineer doom-scrolling LinkedIn is simple. Are we about to climb out of the pit? Or is this a dead cat bounce before the next plunge? Stick with me, because by the end of this video, you'll know the precise leading indicators and the month analysts say the real comeback begins. Let's rewind. During the lockdown boom of 2020 and 2021, big tech hired like caffeinated auctioneers. Headcounts up 38% in only 24 months. Then three dominoes toppled. First, money got pricey. The Fed yanked rates from near zero to north of 5%, and venture capital froze. Second, demand snapped back to the physical world. Growth projections written for stay-at-home life suddenly looked delusional. Third, generative AI exploded, delivering a 30% boost to coder productivity almost overnight, according to GitHub telemetry. And the result? Meta, Microsoft, Google, and even UPS, the brown truck guys, announced successive rounds of performance realignment, booting everyone from junior devs to senior product leads. In April alone, another 23,000 pink slips landed, capping a 2-year tally uglier than the dot-com bust. Now, why did the hiring engine stall? Reason 1. Code gen autopilots. GitHub Copilot now ghostwrites about 46% of production lines in repos where it's enabled, cutting cycle time and trimming headcount needs. Reason 2. Capital discipline. High-rate debt and cautious investors forced growth at all costs to pivot toward profitability, reduce burn, and even try to get to default alive. Reason 3. The pandemic hangover. Projects launched for virtual events, grocery delivery, and streaming classrooms overshot reality. When normal life returned, those teams looked bloated. Put together, executives realized they could ship roughly the same features with smaller, senior-skewed squads, hence the very public badge bonfires. But here's the plot twist Wall Street missed. CompTIA's January snapshot shows 228,000 tech roles added across every sector of the economy, even as pure-play tech companies still cut. Tech unemployment sits at 2.9%, barely above frictional levels, and big tech interview volume is roughly 40% higher than this time last year, according to the Pragmatic Engineers Prep Platform data. Translation? Demand never vanished. It rotated into AI infrastructure, cybersecurity, and cloud modernization. NVIDIA's Jensen Huang put it bluntly at a February fireside. San Francisco is back, but it's an AI city now. Open any recruiter inbox in 2025 and you'll see the same logos: OpenAI, Snowflake, Anthropic, Poolside, Cohere. They're battling for engineers who can spin up petabyte-scale vector stores, design low-latency inference pipelines, or harden cloud cages against prompt injection hacks. Financial giants are in the mix too. JP Morgan alone advertised over 3,000 AI-related roles during spring earnings season, some at compensation bands cresting $300,000. And the cybersecurity chasm. The latest ISC2 study counts 4.8 million unfilled seats worldwide. Bottom line, if your resume screams Gen AI Infra or Zero Trust Architect, you are the scarce resource. Here's where it gets uncomfortable. Senior platform engineers able to juggle GPUs, Kubernetes, and retrieval-augmented generation often juggle 2 or 3 competing offers, some with signing bonuses reminiscent of the crypto boom. Meanwhile, traditional front-end or CRUD back-end devs are finding that the latter not only has fewer rungs, but lower titles and flatter pay. Hello Interview's founders say interview bar expectations have risen an entire standard deviation since 2021, leaving junior candidates gasping. Moral of the story, the market no longer pays for keystrokes. It pays for compute leverage. So, when does the broader tide turn? Most macro analysts peg Q3 of 2025 as the inflection point. Why? Fed models project at least 2 rate cuts by then, unlocking deferred venture rounds. Plus, enterprise pilot AI projects should roll into production budgets. Fast forward to 2026, and hiring widens beyond AI, cloud, and cyber into the boring stack: payments, e-commerce, even digital health. New graduates, brace yourselves. Historical data shows entry-level seats reopen about 3 hiring cycles, after a downturn, which would be late 2026 into early 2027. Survival is a strategy game, so here are 4 power moves. 1. Upskill into AI adjacency. LLM ops, LangChain, or RayServe, anything that glues models to prod. 2. And narrate impact, not syntax. Hiring managers remember quantified revenue lifts, not clever list comprehensions. 3. Network where opportunity clusters, the San Francisco to San Jose corridor. Locals now call Area AI, Austin's Silicon Prairie, and the invite-only ML Ops Slacks. 4. Embrace fractional gigs. 90-day contracts convert to full-time twice as often as cold applications, and they stretch the runway on your savings. Track your progress like a dev sprint. Every week without upskilling is technical debt against your future self. Forget vibe-based hiring gossip. Watch the dials. TrueUp's live tracker currently shows about 235,000 open tech roles. History says crossing 300,000 marks expansion mode. CompTIA's monthly tech jobs report reveals whether that runway grows or shrinks relative to the broader labor market. Finally, follow venture dollars. When generative AI funding prints another record quarter, which last year was $56 billion, headcounts follow with a 2 to 3 quarter lag. Keep those 3 charts on a browser home tab, and you'll spot the next hiring wave before the LinkedIn influencers start posting victory laps. Look, tech jobs are not evaporating. They're evolving. The dot-com crash gave us leaner startups and Web 2.0. The Great Recession birthed cloud-first giants like Uber and Airbnb. This downturn is the crucible forging an AI-augmented engineer. Fewer headcounts, yes, but each with 10x leverage. History is clear. Every skills reset graduates a cohort that commands higher salaries and greater autonomy. The question is whether you arrive at that future as a principal architect or an industry footnote. All right, code warriors, spotlight's on you. What's your comeback strategy? Drop it in the comments so the rest of the community learn from each other. Tap subscribe right now for the latest tech jobs news. No fluff, just raw numbers and field notes to keep your career ahead of the curve. And if you really want the jump on the next wave, cue up the video on screen. Top 5 AI skills hiring managers crave in 2025. Because when the floodgates open, early movers write the future, and late adopters read the history. See you there.